Hi, I am Joel. Tonight we're talking about for the IFRS on the small and the medium enterprise or SMEs. This section 2, concept and the general principles. Number 1, scope of the section. This section describes the objective of the financial statement on the SMEs entities and the qualities that make the information in the financial statements of the SMEs useful. It also establishes the basic concepts and the principles underlying the financial stance of the SMEs. Number 2, objective the financial of the SMEs entities. The objective of the financial SMEs entity is to provide information on the financial position, performance, the cash flows on the entity that is useful for the making economic decisions for the wide range of the users who are not able to demand results tailored to your specific information needs. Number 3, recognition of the assets, liabilities, income, and the expenses. Recognition is this process of the incorporating in the financial statements and item that meets the definition of the asset, liability, income, or expenses and that meets all the following criteria. A. It's probable that the future economic benefits associated with the item will flow to the relief to the entry, and B. The item has cost of value that can be measured reliably. Failure to recognize the item that satisfies these criteria is not rectified through disclosure of the accounting policies followed, not through notes or other explanatory material. Number 4, general principles of the recognition of the measurement. The requirements for the recognition and the measurement of the assets, liabilities, income, and expenses. These IFRS are based of the general principles derived on the ESP for the preparation of the presentations, the financial and the front full IFRS. Number 5, recognition on the financial statement assets. An entity will recognize an asset in the statement of financial positions when it's probable that future economic benefits will be obtained for the entity and addition to the asset have cost valued that can't be measured reliably. An asset will not be recognized in the statement of financial position with it's not considerable probable that from corresponding distribution economic benefits will be obtained on the future beyond to the current period begin report. Instead, this transformation will result in the recognition of the expense in the statement on the composite income or the income statement if present. Number 6, liability. And the entity shall recognize on the liability in the statement of the financial positions when the entity has obligation on the end of the reporting period as of a result of the past event, or B. It's probable that entity will be required of the liquidation to transfer resources that incorporate economic benefits, and C. The amount of the statement can be measured reliability. And the contingent liability it's a possible but uncertain obligation or the present obligation that it's not recognized because it does not meet one or both of the conditions in sections B of C of the previous paragraph, and the entity shall not recognize accounting liability as liability, except in the case of the contingent liability on the acquirer in the business condition. See section 59, business combination of the goodwill. Number 7, income. The recognition income comes directly from the recognition and the measurement of the assets and liabilities. An entity shall recognize income in the statement of the comprehensive income or income of statement if presented when it creates in the future economics benefits has a restraint related to the increase in the asset or decrease in a liability that may be measured reliably. Number 8, expenses. The recognition of the expenses comes directly from the recognition of the measurement of assets and the liabilities. An entity shall recognize expenses in the statement of comprehensive income that are in the income statement if presented when the creation in the future economic benefits has arisen related to the decrease in the asset of the increase on the liability that can be measured with reliability. Number 9, measurement of the initial recognition. On the initial recognition, an entity shall measure asset and liability and historical cost, unless this IFRS requires initial measurement on another base such as fair value. Subsequent measurement financial of the assets and the financial liabilities. An entity shall measure basic financial asset and basic financial liabilities has defined the section 11 basic financial instruments. Had amortized costs left in payment except of the investment in non-convertible and not putable preference shares and shares not putable comp that are leased or whose fair value can really be measured in the another way, which are measured at fair value with change in the fair value recognized in the profit. Okay guys, this is all that you need you know about on the section 2 of IFRS for PYMES. Thank you so very much for your attention. Until next time.